The following radio program is for informational purposes only and is neither specific nor tailored financial advice to any individual. It is not intended as an offer or solicitation for the purchase or sale of any financial instrument. Always do your own due diligence and consult a financial advisor before making any investments. Investing involves risk, which can result in the loss of any or all principal. Peter Weitz is a registered investment advisor with Fusion Analytics Investment Partners, LLC, an SEC-registered investment advisor, as well as a registered rep with Fusion Analytics Securities, LLC, a FINRA registered broker-dealer and SIPC member. All views expressed in this program are those of the host or guests and do not reflect the opinions of Fusion Analytics Investment Partners nor its affiliates. Your investments. How secure are you that they are secure? Do you want to know more about investing, retirement, and moving to the next level in business? Welcome to In Black and Whites, featuring host Peter Weitz. Our program will answer all of the questions about your future and so much more. It's all about smart business and smarter investing. Now, here is your host, Peter Weitz.
Hi, thanks. Welcome back to the program. I'm your host, Peter Weitz. Quick thank you to last week's guest, Quincy Faison. We got a lot of nice response in regards to the planning of 401k plans. But as you all know, HR and HR-related issues, and particularly employee benefits, are a big soft spot for me and a big focus of my practice. And I want to spend the entire show this week talking with my guest about what I'm finding to be an absolutely amazing technology that no one knows about. And once we get the word out, particularly on this show, I think it's going to really drive a lot of people to think a lot more about how they can maximize the things that are available to them. And today, what's available to them is a tax credit. So before I get into really what that's about, let me just give you a brief introduction to today's guest. His name is Shannon Scott. Shannon has been a serial entrepreneur and primarily in technology, and he has gone on to create several different software packages. The most recent and the one we're going to talk to about today, which was founded in 1998, is called Tax Break, and it's focused solely on credit recovery, and it's actually been recognized as an industry leader in tax credit processing. And Shannon has spoken in numerous events all around the country regarding tax credits. So before I introduce Shannon to the program, let me just tell you a little bit about what that really is, okay? There's billions of dollars every year that are forfeited by companies not taking advantage of tax credits. And from the little that I know, and I'm going to find out a lot more today, there are over 3,000 different tax credits that are available for employers. They just don't know how to mine for them. Well, Shannon's gone ahead and designed a software that collects all of that data, all the tax credits, and when he marries that with corporate data, he's able to determine to the penny what a company can save in tax credits. So before I give away his whole story, let me introduce Shannon Scott. Good morning, Shannon.
Good morning, Peter. It's a pleasure to be here today. I appreciate you having me on.
Yeah, no, I think people are going to find this fascinating. And so I titled the show, You Deserve the, quote, tax credit. But literally, you deserve the tax credit because you designed this. Give me a couple-minute overview on how this all began.
Yeah, actually, I would love to take more credit for the actual program itself, but this tax credit program has actually been in existence since the early 1980s. The climate economically was very similar to the way it was 2 years ago. High unemployment. Typically, those unemployed were in the blue-collar, hourly wage sector of the business. High unemployment for veterans, high unemployment for disabled individuals. So back during that climate, the Congress came out along with the help of President Reagan and said, listen, we need to do something to get these individuals jobs. This unemployment rate for these blue-collar individuals is just way too high. So they came up with a program that used to be called Welfare to Work. And essentially what happened there, they were going to reward employers for hiring individuals from certain demographic and geographic targeted groups. A perfect example was if you receive welfare benefits, we're going to give an employer money for hiring that person to get them off of welfare. Obviously, the thinking was we will lower the unemployment rate, but the second was we're going to save the government money and the taxpayer money because typically, as in today's climate, it takes about $27,000 a year in government funding to keep one person on welfare. That includes all the administration expenses plus the cash that's paid out. Well, if I can turn around and give a business $9,000 tax credit to hire that individual, obviously the net gain for the government, the net gain for the taxpayer, and the unemployment rate lowers, the individual gets a job. And as we all know, especially with everything that's going on today with Obamacare and the high unemployment rates, everything in society starts with a job. You want good health care, you need a job. You want to be able to provide for your family, you need a job. So it's kind of thinking around the program. Now, it's changed many, many times over the years. It is now called the Work Opportunity Tax Credit. So what we've essentially done is we've just created technology to help businesses take advantage of that tax credit because it is an HR-related tax credit. It used to be a very paper-intensive process. So we came in to the picture and said, hey, how can we make this easier for employees to take advantage of this money that's out there? And there's plenty of it. There's usually around $5 billion a year for businesses and business owners out there, and they're just not taking advantage of it.
So the government's prepared to give $5 billion in tax credits this year.
The government is prepared to give $5 billion in tax credits, barring, and I will say this one caveat, this just like unemployment comes up for extension every 2 years in Congress and the House. Right now it's currently under a hiatus, but that doesn't really mean anything because businesses can still take advantage of it. It is sitting in Congress right now, and we're hoping to have it passed before May 22nd, which will extend the program for 2 more years. But when it is extended, it's made retroactively. But that $5 billion typically creates over 1 million new jobs a year, if you think about that for a second. And that's one thing that we're not talking about a lot when we're debating up there in Congress right now. We're worried about the expense of programs like this Work Opportunity Tax Credit program. What we're not doing is how are those 1 million new jobs offsetting the cost of the program?
And so we've got all these tax credits. I mean, how did you find out about this? I mean,
Well, I can't take credit. So the organization, the company was started in 1998, and as you stated in your opening, and I appreciate the opening, I am a technology guy. I've always been in the software business. I've always created technologies, build businesses, try to sell them off, typically around HR type solutions and scenarios. I actually ran into this company back in 2007, met an individual on an airplane, 4 hours on the airplane. He was telling me what he does, and essentially at the end of the conversation, of course, he was a sales guy, and he said, he did a spiel for hours. Essentially at the end of the conversation, I looked at him and said, so basically you guys give away money. And he said, yeah, that's basically what we do. And I said, well, that's fascinating. And I said, so why isn't everybody in America participating in this? Why isn't every business owner using this program? And he said 3 main reasons. Number one, it's too complicated. There's a lot of paperwork involved, very much like trying to buy a house. You're filling out mortgage paperwork. It's just so intensive. Number 2 is the IRS is typically not in the business of teaching business owners how not to pay taxes. So there's just not a lot of information out there about the program. And third and final, most businesses go ahead and assume that their tax people or CPA firms are doing these credits for them. However, because it is an HR function, unfortunately, CPAs typically don't have the resources or the technology to be able to perform this program and get these credits back for these business owners.
So let me ask a question. So let's suppose, so you've obviously beat everybody to the punch because you have the ability to mine for all these taxes, but where do you find the tax breaks? I mean, do you have to look at the Internal Revenue Code?
Yeah, so this is kind of a joint program between the IRS and the Department of Labor. The Department of Labor obviously has a unique ability to come in and say, listen, we need to create these programs because our job is to not only keep the unemployment rate down, but we need to find individuals in these targeted groups jobs. Now, the IRS comes along and says, of course, we're going to give the tax credit. Now, I want to make sure we're clear. This is a tax credit. It's not a tax deduction. So 100% of the value of the credit goes to that business. And, of course, in an LLC and a sub-S type situation, it would go directly to the business owner. That being said, the program itself is, it's not something that's rocket science. I mean, the program states very specifically if these companies are hiring individuals from these targeted groups, which are about 10 different categories, or these certain areas of the country, they can take advantage of the credit. The difficult thing is trying to screen for these individuals because it is a new hire credit. You can't go back 2 or 3 years in a lot of cases and say, hey, I missed this credit. Let me file an amended return. So what we've done is we've taken the complexity out of it by saying every time you hire an individual, whether you hire them electronically through some kind of applicant tracking system or whether you hire them just off of a paper-based process. Have them log into the specific website we give you, answer those questions, and we automatically process that paperwork for you. So we take all of that HR function out of the HR department's hands and put it into our hands.
And so for an HR director's perspective, you're basically going to them and saying, give me a little bit of information and I'm going to make you look great to your bosses because I'm going to save you a bunch of money.
It's funny that you say that because that's kind of a sales pitch we do when we go to local trade shows. 5 years ago, if you were to ask an HR person about tax credits, they would have run from you. Typically because the first thing they see in their head is, number one, it's way too much paperwork. So it's going to increase my workload and my department's workload. Number two, we're not obviously getting advantage of it. So when we're at these shows and we see these people trying to run from us, we almost have to kind of reach out in the aisle and tackle them and say, hold on, I've got a really compelling story for you. Imagine walking into your CFO's office tomorrow and saying, hey, I found you $100,000. Now that's a completely different conversation than what those conversations take place now, because typically HR departments, are kind of rightfully so or wrongfully so kind of foreseen as a burden as far as a financial burden on the company.
Yeah, they're a cost center.
Absolutely. So we're turning them into a profit center. We're putting Superman capes on their back, and we're sending them into the CFO and CEO's office and empowering them.
That's amazing. So the technology that you have, basically, it fills out the paperwork. What happens? What does the client get? What do they see?
So basically, when you hire an individual, they'll answer a questionnaire very similar to they would when they're filling out a job application. They'll answer a questionnaire. It's 8 questions. There are questions like, have you received government benefits in the last 6 months? Have you received, or anybody in your household received certain benefits? Are you a retired veteran? Have you received disability? So they'll answer those questions, and they're voluntary questions. They cannot be forced upon the new hire or the applicant. Our system then comes in based on those questions and the algorithms we've built with the federal government's help. This includes geographic credits, which we really haven't touched on. Essentially, certain areas of the country, and I'll just say San Antonio because San Antonio happens to be one of the biggest empowerment zones is what they're called. If you have individuals that work for more than 90 days in San Antonio, in certain areas of San Antonio, and they live in that same area, you are also entitled to a tax credit because you're trying to boost that local economy. So what our system does is go through these zip codes. We look at census tracts. We look at the demographic information of the employee that's been hired, and we instantly return an answer to that employer. We say, Joe Smith is a tax credit for you. He's a potential tax credit, of course, if he answered honestly. We need a couple more bits of information. We might need a copy of a driver's license. We send that back to the hiring manager instantly. They gather that documentation, send it to us instead of filling out all that paperwork that they used to fill out. And then we start processing the credit with the government on behalf of the employer.
Yeah, that's amazing. When we get back from the break, Shannon, I want to spend a little bit of time talking about some of the definitions of really where the work opportunity tax credits come from. Some of the enterprise zones you mentioned, so I can get the listeners really thinking about how this all works. We're going to take a quick break. You're listening to the In Black and White's radio program on Voice America Business.
When it comes to business, you'll find the experts here. Voice America Business Network.
Climbing Mount Everest is an amazing feat, and many have died trying to do so. However, more people have died descending Mount Everest than in reaching the summit. Part of the problem may be that people are so focused on reaching their objective that they fail to plan appropriately for what they will do or should be prepared for afterward. Similarly, people are so focused on saving for retirement and reaching retirement that they fail to plan appropriately for what they will encounter once they have actually retired. With 1 out of every 4 65-year-olds today living past the age of 90, you may be retired longer than you are actually working. Have you devised a plan, process, and discipline to ensure that you will not run out of money? If you are not sure what to do, then simply contact Peter Weitz and his retirement team at Fusion Analytics. We help manage human emotions using 3 proprietary investment techniques. Our job is to evaluate the forces that the typical investor can't see so that wealth is preserved and not lost. Find out more at inblackandwhites.com. Weitz is spelled W-E-I-T-Z. Email Peter at inblackandwhites.com. In Black and Whites, we win by not losing.
When it comes to business, you'll find the experts here. Voice America Business Network.
You are listening to In Black and Whites. To reach Peter Whites or his guest today, please call 1-866-472-5790. That's 1-866-472-5790. You may also send an email to peter@inblackandwhites.com. Whites is spelled W-E-I-T-Z. Email Peter at inblackandwhites.com. Now, back to this week's program.
Hi, thanks. Welcome back to the program. We're joined today by Shannon Scott, the CEO of TaxBreak. And I just want to give you a couple of housekeeping issues. You can follow Shannon on @TaxBreakCredits or TaxBreak CEO on Twitter, or you can go to their website. It's taxbreakcredits.com. To follow me on Twitter, I'm going to be tweeting some statistics that Shannon throws out during the program. You can follow me at Peter Whites or log into my blog in blackandwhites.com. So, but prior to the break, Shannon was walking us through some of the requirements to get over $5 billion in tax credits this year, employment tax credits, known as the Work Opportunity Tax Credit. And Shannon, I'm hoping that you can just briefly describe what are some of the criteria that the government is using to engage employers with regards to the tax credits. What are some of those criteria?
Well, essentially, let's kind of start out with the demographic criteria a little bit further in detail, as we stated before. There are programs that are attached to this program. So you might have heard last year of a program called VAL. It's a Veterans to Work program that was passed by the House and the Senate mid-year last year. Once again, this program, if you hire a disabled veteran, it's $9,600 in tax credits for your organization. If you hire someone who's received benefits such as, let's say, a single mom who may be receiving WIC benefits or receive some kind of government subsidy for that, that individual could be worth up to $2,400 per year in tax credits. There are tax credits for these empowerment zones. You know, San Antonio, we kind of mentioned them a little bit, but most major cities in this country have some type of empowerment zone. Now, how those empowerment zones are determined are typically by census tract, but quite honestly, it's who's ever got the best politicians in those areas that can go and fight for those zones. So they want to, stir up economic development. Hey, if you move your business to our area, everybody you hire who lives in this area will be able to receive a $3,000 per year tax credit on. Those types of tax credits, I will note this, the Work Opportunity Tax Credit is a new hire going forward credit. And there's some specific criteria there. Not only do they have to receive some kind of government assistance, or they have to live on tribal lands and work on tribal lands, which is another category of that, but you have to employ them for basically 120 hours. So you can't just hire someone and fire the individual the next day just to receive the credit. And that's not something that's been around a long time. It's just been around within the last 10 or 12 years. They've actually had to modify the law because there were companies and individuals who did understand this policy, especially in high turnover businesses, and they were hiring and firing individuals just to take advantage of the credit. So that new hire WOTC credit, the demographic portion, you have to work them 120 hours. It doesn't matter if you work them 120 hours over a 12-month period. They just have to hit that 120-hour threshold. Those empowerment zone credits, you have to work the individual for 90 days. And once again, it's not 90 days in a row. It's just 90 days within the period of that tax year. So you can get that tax credit for that individual. And they do have to live and work in that same area of the country.
So you mentioned that, that there's several algorithms that run the program. How do you go about finding out if there's a new tax credit that comes out this year that would apply to your software?
Well, essentially what we do is we stalk Congress, not only from a federal level, but from a state level as well. One of the other things that we perform as a service for our clients is we monitor all 3,000 different types of state and local and county credits that are out there based on hiring and HR incentives. That's a huge portion of these credits that we find. Of course, the federal credit's the one that's the most well known because there's not a lot of qualifications. You don't have, the areas are very large. but we have to monitor those state credits as well. I'll give you an example. The state of Georgia, certain areas of Georgia, there's a job creations credit. Essentially, if you create 5 jobs or more, new jobs, you can't replace an individual, but if you create 5 or more new jobs in a year, there's a $5,000 tax credit per job per year. In California, now this is a bill that's expired. We're hoping to get it back, but there's a California enterprise zone. It has nothing to do with that federal enterprise zone credit I just talked to you about. There's a California enterprise zone, and those credits, believe it or not, can be over $25,000 per employee over a 5-year span. It's amazing, amazing amount of numbers that are out there. Once again, a lot of it has to do with lobbying, how well these politicians are working the system, but it is a jobs creation. I mean, 2.3 million jobs will be affected this year just by that WOTC credit. 2.3 million. And when you have 49% of U.S. citizens receiving some type of government benefit, you can imagine the pool of candidates that are out there that are just worth those billions of dollars that are waiting to be hired.
That's unbelievable. So it just depends on, I guess, on the state. Some states are going to be better than others, but across the board, have you ever found a situation where an employer did not qualify for a tax credit?
There are situations, for example, nonprofits have to pay income taxes to take advantage of this particular credit because it is it's a federal income tax reduction, a dollar-for-dollar reduction. So you need to be paying taxes. Now, there are payroll tax credits available for nonprofit organizations, but they're few and far between. So number one,
right.
You need to be a for-profit business. And there's kind of a misconception out there that you have to be paying taxes. You know, a lot of companies that we go to say, listen, we've heard about this program, but right now we're not profitable even as a for-profit company. We're not paying income taxes, so we don't want to take advantage of the program. Here's something amazing that a lot of people don't know. You can carry these credits forward for 20 years. So if you are using an organization like a tax break, that's a consultant, that's only charging you a contingency fee, which is a success-based fee. No fees, no monthly fees, no charges. You're going to be able to take, for every $1 you spend, put $5 in the bank. Because you can bank these credits for years. And I don't think any individual in this country starts a business and says, you know what, I never want to be profitable. So even if you're not profitable now, you can still take advantage of the credits. You just bank those credits. Keep them forward for 20 years, and eventually you will be able to use them. But there's no other program, there's no other money market account, there's no other 401k out there that's going to return that kind of investment.
Yeah, that's amazing. So I could be I could think of a startup company today that's growing like a weed but still losing money but hiring like crazy. They could be banking all these tax credits to offset against income for up to 20 years from now.
Exactly. And if they don't take advantage of it, because it is a new hire credit, and you have to process it within 28 days of the day that that individual is hired, you will lose that credit. You cannot go back. You can't say, I'm sorry, forgive me, I didn't know it existed. It doesn't work like that. And that's not what the program was built for.
All right, so let's back up because you bring up an interesting point. I hire someone today, right? We get done with the show, and then I just say, okay, you're hired. What happens?
So typically, if you are using the system, you will have to fill out that paperwork. The law says, and there's a little bit of leniency there, the law says that you have to have the individual answer those questions on or before the hire date. It also says they're not discriminatory, and all things being equal, let's say you have Joe and Sally. They have the same resume. They have the same job application. Sally has a tax credit. Joe's not a tax credit. It says hire Sally. That's what the program was meant for. So we encourage our employers, at worst case, ask the questions the first day they're hired because that's the way the law was intended. Best case scenario, screen your applicants. Why not? You know, if you walk into a Walmart, if you walk into a Sears, you walk into a Home Depot, want to fill out a job application, usually they have a kiosk set up there, sit down at a kiosk, or they tell you to go online, fill out their job application online. You better believe those WOTC questions are in those job applications because they want to know whether or not this individual is a tax credit. It's no coincidence that 2 years ago when this bill got renewed, 2 weeks after this bill got renewed, Walmart came out and said, we're hiring 250,000 veterans. Now, don't get me wrong. I'm sure they did that for great reasons. You know, there's a huge push in this country to get veterans jobs, and we need that because veterans are maintaining a 27% unemployment rate. But there's also not a coincidence that 2 weeks after the bill got renewed, that 250,000 veterans were going to be hired, because let me tell you that's hundreds of millions of dollars in credit sitting there out in that pool.
Yeah, that's amazing. So, so you do all the research, and basically a client engages you. Do they go to your website? I mean, how do they consistently update information to you so that you go out and find the credit?
So essentially what we like to do is we adapt our practices to their hiring practices. We don't go into a company and say, listen, here's our box, you have to fit into the box. If you hire individuals through an applicant tracking system, which is basically an online web portal, if you hire people through a software-based onboarding system, if you hire people through paper applications, if you hire people over the phone, whatever process they may be, we come in and we customize a process for that client. So if you're hiring through an online applicant tracking system, we actually take our technology, we integrate it with your applicant tracking system. So as that job application is being filled out, it's a seamless workflow for that applicant. So they're sitting there, they're filling out the job application, pops up the WOTC questions, answer those. We go ahead and have them electronically sign it because they do have to have a signature on the documentation. We get that out of the way, and we hold them in a staging area. And when you decide to hire that individual, you let us know you hired that individual, whether through electronic process or through picking up the phone and saying, hey, I hired Sally, and that's when we start the process of the credit.
That's cool. How are the credits distributed?
So the credits, the federal government has basically opened up WOTC offices in every state because it's a massive workload, of course. You got to imagine. There are some credits that we can take your word for. For example, the empowerment zone credit. If you give us a payroll file and it shows the employee lived in XYZ zone and we know your office is in XYZ zone, we can capture that credit for you immediately. These work opportunity tax credits, because they're demographic based, just because someone says they were on unemployment or long-term disability doesn't mean that they actually were. So we put a package together, electronic package. We send it off to the state WOTC office, and they do verifications through the Department of Labor or Department of Veteran Affairs, and they send us back an electronic certificate. Once we have that certificate in our hand, it cannot be overturned by the IRS because it is good as money. It's like going and getting a Willy Wonka golden ticket. Here's your money. We have it. What we do then is calculate the amount of credit based on how much you paid that individual. So all these credits, just because you hire someone doesn't mean you're getting $2,400. It actually is based on the amount of wages you pay them over that time that they're employed with you.
It's the algorithms that have taken the complexity out of this.
Yeah, absolutely. Well, that and eliminate just the paperwork.
Right.
If you would have walked into a typical office, and here's another statistic for you because we're talking a lot about the businesses being able to take advantage of it, but 92% of the businesses in the United States, and this comes from a poll from the Department of Labor in Texas several years ago, so we're going to go ahead and just say, listen, and they're one of the more progressive states as far as WOTC goes. 92% of the businesses that were polled in Texas had no clue this program existed. So in most cases, when we walk into someone's office, they don't have a clue. They come to us and they say, what is this program? It's too good to be true. My CPA is performing this program for us. So that's kind of the one misnomer we've got to get out of the way. And then if they are participating in the program and you're always looking at an HR person there saying this is way too much paperwork. 5 years ago before we launched our technology, you would have probably had to have 4 to 5 pieces of paper additional on top of that whole job application packet that the HR person would have to sign, fill out, make sure it's checked. And then that packet would have had been put in the mail to a company like us. So you can imagine the postage being spent, the time being spent, the effort being spent for a program that you may or may not get a credit for.
That's amazing. We're going to take a quick break, Shannon. When we get back, I've got a couple of things, a couple of different directions, but I want to hear about a couple of, case studies that you have that you've completed, just so we can get an idea of the magnitude and the power of these tax credits. We'll be back in just a quick minute. You're listening to the In Black and White's radio program on Voice America Business.
From the boardroom to you, Voice America Business Network.
Climbing Mount Everest is an amazing feat, and many have died trying to do so. However, more people have died descending Mount Everest than in reaching the summit. Part of the problem may be that people are so focused on reaching their objective that they fail to plan appropriately for what they will do or should be prepared for afterward. Similarly, people are so focused on saving for retirement and reaching retirement that they fail to plan appropriately for what they will encounter once they have actually retired. With 1 out of every 4 65-year-olds today living past the age of 90, you may be retired longer than you are actually working. Have you devised a plan, process, and discipline to ensure that you will not run out of money? If you are not sure what to do, then simply contact Peter Weitz and his retirement team at Fusion Analytics. We help manage human emotions using 3 proprietary investment techniques. Our job is to evaluate the forces that the typical investor can't see so that wealth is preserved and not lost. Find out more at inblackandwhites.com. Weitz is spelled W-E-I-T-Z. Email Peter at inblackandwhites.com. In Black and Whites, we win by not losing.
Voice America Business Network, the bottom line in business.
You are listening to In Black and Whites. To reach Peter Weitz or his guest today, please call 1-866-472-5790. That's 1-866-472-5790. You may also send an email to peter at inblackandwhites.com. Weitz is spelled W-E-I-T-Z. Email Peter at inblackandwhites.com. Now, back to this week's program.
Hi, thanks. Welcome back to the program. We're joined today by Shannon Scott, the CEO of TaxBreak, and we're talking about tax credits that are available to the basically any for-profit business entity in the United States. And prior to the break, Shannon made a comment that a study was done, and it said that 92% of all businesses are not even aware that there's tax breaks available for hiring people, which I think is just incredible. But Shannon, you made another comment about the tax code when we went to break, and I'm wondering if you can comment on that real quickly, what you're talking about.
Yeah, absolutely. We get a lot of questions not only from business owners but also from CPAs as well. Well, how come nobody's out talking about this credit? One reason is, and we stated this before, is the IRS does not typically teach classes on how not to pay taxes. I mean, their goal in life is to collect taxes. But the Department of Labor, which is a co-sponsor of this program, their mission in life is to find people jobs, get people off of government subsidy programs. There's a little bit of battle royale, but, listen, it's the federal government. Who doesn't expect a little bit of battle?
No, I was going to say, sounds like typical government, one hand and the other, doing something completely different.
Exactly. So you will see the Department of Labor out there to the best of their ability trying to talk about this. But from a tax law perspective, from a tax school perspective, the original founder of TaxBreak back in 1998 and the former CEO before I purchased the company was a tax lawyer with a degree from NYU. He practiced tax law for almost 10 years before he even heard of this program. And the only reason he heard of the program is because a client of his happened to ask him a question. Hey, have you ever heard of this Welfare to Work program? The tax law guide, if you've ever read one, and I don't encourage anybody to read one, it's about 1,500 pages, and the font's about 5-point font. And if you ever want sleeping material, it's a great read. But there's one paragraph out of that 1,500-page book that talks about the WOTC tax credit. So that's probably one of the biggest reasons that you don't see a lot of individuals or companies out there preaching about these credits.
And I just want to point out when Shannon uses WOTC, he's talking about the Work Opportunity Tax Credit, and that's really where the crux of where these business tax credits come from. So, all right, so we talked about the IRS doesn't want you to know about them, but the Department of Labor does. But who vets the validity of the credit once you get it, and how do you get explain to the client that this is legit and they're not going to get burned on their taxes?
Well, one of the reasons that we we perform this service as a contingency success-based fee is because of that it's too good to be true kind of, story we get back. Listen, everybody comes and approaches, CEOs and CFOs and say, listen, we know ways we can cut expenses in your HR department. Of course, you sign up for these programs, you sign up for these great technologies, and nothing ever really pans out, or you're just seeing pennies compared to what you estimated you would save. So the first thing we have to do is get past that. The second thing we do, though, is once that certificate is in hand that we mentioned before, that certificate basically states this particular individual is a tax credit for your organization. And if you take 40% of the wages of that individual, obviously up to a maximum amount on an annual basis, and it's not quite as easy as just taking how much you paid them divided by 40% because you got to put that 120-hour qualification in there. But at the end of the day, when it's tax time and it's our time to perform, we hand those certificates over to the employer. And by the way, this can be used on quarterly estimates. So we hand them to them on an annual basis. We hand them to them on a quarterly basis. So those certificates, along with the calculation that we've made and all the backup documentation. And that right there, they hand to their CPA or tax director to file their quarterly estimates or their annual returns. Or in the case of a look back, they're going to have to go back and amend a return. But let me tell you something. A lot of companies look at that and they say, it's going to throw up a red flag to the IRS. It's not. And I'll say this. In my time of being here, with the 7 years that I've been running this company, I have not heard a story out of our 75,000 client locations of the IRS coming in and auditing someone or performing an audit based on the fact that they filed for a tax credit. That is not the best PR move in the world. Wait a second, you're hiring individuals with disabilities? I'm going to audit you. So you just don't see it happen that often. But the case studies, which you mentioned, which kind of fit into this conversation, are absolutely enormous. That 3-year look-back credit, the one that, and I'll give you a great little story here. We had a CEO of a fairly large staffing company in the Southeast. They were affected by Hurricane Katrina. The federal government came out and said, hey, we're going to basically blanket the whole state of Louisiana and create a category of this work opportunity tax credit. So if you lived in Louisiana when the storm hit, and if you continue to work in Louisiana after the storm hit, your employer is going to get a tax credit. Once again, encouraging people to stay there, encouraging the economy, encouraging businesses to start back up. This individual said, listen, I'm afraid of an audit. I don't want to pay for an audit, And as we said, listen, it's not going to cause an audit. This is a Department of Labor program. And then, of course, secondly, he said, well, listen, I don't want to pay them into return. It's going to cost me $10,000. We said, give us a try. Take a look at this program. You're a huge employer. We promise you it'll benefit you. He said, listen, contingency fee, I'll go ahead and let you guys do this research. $7.7 million we found this one individual.
For what he was, and he didn't want to do an amended return for $10,000.
$10,000 got him $7.7 million. He took that money, walked down the street, and bought his biggest competitor with it.
That's a great story. Does it? I mean, you mentioned about people are afraid of an audit. I mean, I'd imagine if you have this this golden ticket, as you call it, and you send it in with your tax returns, the IRS looks at it and they said, well, it's obviously issued by the Department of Labor. We're not going to mess with that.
Well, you don't even really have to send it in. The corporate tax forms that you fill out at the end of the year actually has a line on it specifically dealing with WOTC, work opportunity tax credits, or empowerment zone credits. So the IRS knows it's there, and they're actually asking you, just like you would when you're filling out a corporate tax return, you would put any of your business deductions, business expense deductions on there. It has a line for work opportunity tax credits and empowerment zones. So they're expecting those numbers to be filled in because they have it directly on the corporate returns. Now, there is one supplemental form that you need to file so you can give a little bit of backup documentation, but in most cases, the IRS won't even ask you for those certificates. You just hold on to those just in case they do.
And I'm pretty sure I'm going to know the answer to this question, but it has nothing to do or doesn't take away from any otherwise tax deductions. It's in addition to, I'd imagine.
Well, the one thing that you can lose in certain circumstances is your standard wage deduction, and it's only on employees that qualify for the credit. Now, that standard wage deduction on average And I'm let's say I'm picking on the blue collar hourly wage industry because typically that's a higher qualification rate just based on the demographics. And by the way, 25 to 30% of everyone you hire in that industry should qualify you for tax credit. We're talking all blue collar hourly wage industries across the board. But an individual a company will probably get a standard wage deduction of around $200 per year for that individual in the blue collar industry. Typical tax credit, an average tax credit on the low end is about $1,700 a year. So you're swapping $1,700 for $200.
It's a no-brainer. And then I guess, is it only, you bring up a question about blue collar, do the tax credits only apply to hourly workers, or do salaried professionals or, higher end people help as well? Or do they qualify, I should say?
Absolutely. Now, they're going to have a lower qualification rate just typically because if you look to the demographic perspective of unemployment in the government incentive programs, typically skilled labor, trade labor are a little bit higher as far as the government receiving government benefits. Obviously disability rates are higher because of the type of work. Workman's comp rates are higher because of the type of work that they perform. But white collar industries can absolutely take advantage of the credit. And funny, I'll give you a story here. I was presenting several months ago to a group of attorneys. There was probably 200 attorneys in the room, and these were mainly, tax attorneys, but there were some corporate attorneys in there as well, some business attorneys. And this one individual who was sitting on the front row during my whole hour and a half speech, he looked very bored and very disturbed, and at the end of the speech asked for questions. And this is one thing I want a lot of employers who are listening and everyone else to kind of take advantage of, because this is something not only near and dear to my heart as a subject, but it's also near and dear to my heart as a business owner. He raised his hand and he said, I don't understand why I just sat through this 90-minute presentation, because who would hire individuals like this? And I asked him, I said, specifically, what do you mean, individuals like this? I want to make sure you understand the demographic nature of this. And he goes, well, these people on welfare and these people on, disability. Well, who would hire these people? Why would they do that? Who's going to hire a felon? I'm a lawyer. I'm not going to hire a felon. And I looked at him and I said, did you realize that in 36 states, a DUI is a felony? I said, how many lawyers do you have in your law firm? And he said, a couple hundred probably total between all of our offices. I was like, you can't tell me that one person in that office has not had a DUI? I mean, let's be honest here. I'm a CEO. We're talking about attorneys here. I'm a CEO. I mean, you go out and have 2 glasses of wine. People make mistakes to do these things. I'm not condoning that at all, but, it happens. He said, well, I have had a DUI. And I said, you could have been in tax credit for your organization. So before you think about that or start classing these individuals because of the demographic nature, you've got to think about a lot of these things here. Most felons are not violent offenders. Most felons are people who've made a mistake, committed a crime, white collar, blue collar. I've got individuals that work for my organization and have worked for my organization in the past who are white collar people. In fact, I've got one individual who's been one of my top sales reps for a long, long time, or was at one point. And he was in prison for almost 7 years for a white collar. He made a mistake. He came out. He served his time. We got the tax credit on them, of course, but because we're practicing what we preach. These individuals are individuals out there that deserve jobs, that need jobs. These veterans out there need jobs. And these businesses have to step up and say, listen, it's worth this money to take a chance on these individuals, because most of the time we're seeing from our employers that these individuals are more loyal than typical employees.
Yeah, and I agree with you. Just because you made a mistake doesn't mean that you're not worthy of being hired or being a good employee. So that's a pretty interesting point, Shannon. I appreciate that. We're going to take a quick break. When we get back, I really want to focus a little more on what we're just talking about, Shannon, the types of people that qualify for the credits and so on. You're listening to the In Black and White's radio program on Voice America Business.
Voice America Business Network, the bottom line in business.
Climbing Mount Everest is an amazing feat, and many have died trying to do so. However, more people have died descending Mount Everest than in reaching the summit. Part of the problem may be that people are so focused on reaching their objective that they fail to plan appropriately for what they will do or should be prepared for afterward. Similarly, people are so focused on saving for retirement and reaching retirement that they fail to plan appropriately for what they will encounter once they have actually retired. With 1 out of every 4 65-year-olds today living past the age of 90, you may be retired longer than you are actually working. Have you devised a plan, process, and discipline to ensure that you will not run out of money? If you are not sure what to do, then simply contact Peter Weitz and his retirement team at Fusion Analytics. We help manage human emotions using 3 proprietary investment techniques. Our job is to evaluate the forces that the typical investor can't see so that wealth is preserved and not lost. Find out more at inblackandwhites.com. Weitz is spelled W-E-I-T-Z. Email Peter at inblackandwhites.com. In Black and Whites, we win by not losing.
The business community's first choice in Internet Talk Radio. Voice America Business Network.
You are listening to In Black and Whites. To reach Peter Weitz or his guest today, please call 1-866-472-5790. That's 1-866-472-5790. You may also send an email to peter@inblackandwhites.com. Weitz is spelled W-E-I-T-Z. Email Peter at inblackandwhites.com. Now, back to this week's program.
Hi, thanks. Welcome back to the show. I'm your host, Peter Weitz. You're listening to the In Black and Whites radio program. Make sure you follow our blog, inblackandwhites.com, or definitely follow me on Twitter today at Peter Weitz. I'm tweeting some pretty staggering statistics that are being spewed out by our CEO and the guest today from Tax Break Credits, Shannon Scott. And Shannon's been throwing out some amazing data about tax credits. And, I'm going to probably have to re-listen to the show several times so I can absorb really the crux and the value of what it brings. But prior to the last break, we were talking about who qualifies for a credit and who doesn't. And, companies that are growing are obviously going to be get the biggest bang for the buck out of this. But Shannon, here's my question. So what does a HR director do? I mean, how often do they have to provide information to you? I guess my question stems from an HR person, pushing back saying, yeah, it sounds like a great idea, but all I'm going to do is create more work for myself.
I would have answered that question differently a couple of years ago when paperwork is involved, because it would have taken 30 to 35 minutes every time you hire someone in additional work, and probably cost $100 or some odd dollars to process that paperwork, put it in the mail to us. But now with our electronic processing systems and the ability to integrate with their hiring systems, there's really not a lot of HR involvement at this point. The employee signs the form. We might ask the HR person, and this may be a 1 out of every 4 or 5 cases, to provide us with some kind of backup documentation, like a copy of that individual's driver's license or passport, which you need to process the I-9 anyway. So hopefully they would have that, on file. But everything else is done. You're literally talking about a 35-second process to screen. You're talking about probably another 45 seconds to a minute to have them do an electronic signature, this being the new hire. And then if we do have to request information from the HR individual, you're talking about a couple minutes time to probably track that individual down and say, hey, I need a copy of your driver's license. We even have a mobile app, which is the only one like in the industry, that they can snap a picture of a driver's license so they don't have to go around, take a copy of it, make a copy on the copy machine and fax it. You can snap it on your mobile phone. It sends to our database automatically, and it deletes it from the person's phone immediately, so there's no issue of somebody walking around with a copy of somebody else's driver's license. So the process is so easy and so seamless. Now, to calculate the worth of the credits, we have to receive a payroll file. That payroll file, though, we typically don't ask the HR person to send it to us. We go and integrate with their payroll provider, and we pull the report for them out of the system, or the payroll provider sends it to us on a monthly basis.
Now, you also have a payroll company as well, correct?
Yes, we have it's a separate entity. That's correct, and we do provide those benefits. So essentially, if you're a client of the payroll, then you get the tax credit services built in, and no extra cost. And of course, that integration exists as well. So we're able to pull those files and process all that back end. Kind of a one-stop shop is what we're looking for.
Right. Yeah, that's awesome. So, and obviously you've got all the data. As being the payroll company, it's pretty easy for you to go ahead and process the credit.
Yeah, that's correct. And we work with over 200 different payroll providers when we already have electronic integrations with through payroll software providers. We work with some of the big ones. I won't mention any names on here, of course. But, you know, if you've got a payroll provider, we've either integrated with them or we can integrate with them. Our goal is less paper, less touching, less mistakes, because we have to be accurate in every single thing we do. You know, I will knock on wood here. In the years we've been in business, there's never been a WASI credit overturned from our organization. You know, obviously, hopefully the certificates help there, but our calculations haven't been questioned as well. So we want to make sure we're reducing that human error portion of it, which unfortunately, listen, we're all human. We all make mistakes. I make them every day. You know, when we're in a scenario where I'm picking up the phone and calling you or having you type something into a database, mistakes can be made. So our preference is to go into that payroll system after the payroll's run, make sure it's calculated properly, and pull it into our database.
Yeah, that's pretty slick. What's the largest tax credit you've ever received for a corporation?
I would say now we actually back in 1999 and 2000, we had some corporations that were working on what we call not the contingency fee, but a utilized credit, which basically means they only gave us the contingency for what we saved them. We have found an organization over $15 million one time. Of course, they couldn't use all that in 1 year. They had to carry that forward. So we've been able to kind of bring that forward every year for them. But we've, over the last 5 years, found over $500 million in tax credits.
That's amazing. And how far back can you go?
On these federal credits, you can go back 3 years. On some of the state credits, you can go back 5, 7, even one state's 10 years. And those opportunities are all still available, even if the bill expires. For example, this California Enterprise Zone credit. A lot of companies are saying, well, it's too late. I didn't take advantage of it, so I'm just going to forget about it. Even once the bill expires, you still have that look-back period, which is still valid. And that look-back period is not a calendar period. It's from the date you filed your last return. So for all these corporations that are, in an expired status right now, like California, they're saying, I don't want to worry about it. Well, listen, if you've amended your return, you're not filing until October, you still have 3, 5, 7 years from October to look back.
Yeah, that's amazing. So who's your best source? I mean, is it a HR director or is it the CFO?
Well, I think, it's funny. They're both kind of equal. I mean, the CFO is obviously going to look at this program and is going to say, listen, the reason why we're not doing this program is unbelievable. We should participate immediately. But I think from the HR director's perspective, the sense of power, and we mentioned this earlier in the show, an HR director has to walk into that CEO or CFO's office on a monthly basis and say, listen, I cost you X amount of dollars this month. It's that cost center perspective. It's that this is a drain on our company. It's a necessary drain. We have to have it. HR is absolutely a viable resource. Every company needs some kind of HR. It prevents lawsuits. You got to hire the right individuals. You got to make sure these employees are being taken care of, because let's be honest, the most valuable asset in your company is your employees. They're your brand. They're the ones that are going to be the future of that company. But you still look at the bottom line. So the CFO is looking at an opportunity to say, hey, we can make this a profit center, where an HR person is going to be able to walk in there. So typically HR departments are under budgetized because of the fact that they are drain on the company. The HR director can walk into the CFO or CEO's office and say, hey guys, I found you $100,000. I just need 20 of that. And I can increase, I can make sure this happens. I can increase my staff. I can do the things I need to do. So it's a compelling argument either way. Now, I will tell you this. There's one group of individuals, typically tax consulting individuals, who have not been able to take this and this is where this really becomes important in getting educated or partnering with a company like us that does these types of things. A lot of these CEOs and CFOs, as I mentioned before, do assume that these credits are being processed for the organization. So typically when I do walk into the CEO's office, he turns to the CFO or the tax director or the CPA and goes, why have you been missing these credits? Well, my rebuttal to that is they're not equipped to handle the credits. That's why you need companies that are experts at this to come in and look at those credits for you.
Yeah, because, how would you be able to, it would take their entire day to figure out all the credits that are available. I mean, they're in their entire work week.
Well, and you can imagine a small CPA firm or even a regional CPA firm having the time and effort and money and finances to create a software like we've created to screen for these individuals. I mean, we've invested over $3.5 million in the last 7 years in this technology.
Yeah, that's amazing. That's amazing. I really appreciate this, Shannon. I mean, we could probably talk about this subject on and on for days because it's amazing that there's something out there to the tune of $5 billion on an annual basis that 92% of the working world hasn't heard of. And that's what makes it just so cool.
Yeah, absolutely. And you know, we do the best we can to kind of preach from the mountaintops and say, listen, this is available. Come get it. The only thing I would say is they can get very complex. We do run into a lot of businesses who try to process these things in-house, and they do make mistakes, and that's where the red flags get thrown up. So be careful when you're doing it. Research the consulting firm that you're using. Be very, very diligent in that process.
Yeah, and that certainly makes sense. It sounds like because of the software, you're able to eliminate a lot of the error as well.
Absolutely. The less human interaction, the less error there is.
Yeah. Well, Shannon, I appreciate you being on the program. I'm sure that I'm going to get several emails and probably some voicemails with a lot of questions about how to get in contact with you. But why don't you give everybody your website address in case there's other questions?
Absolutely. You can reach us at www.taxbreakcredits.com.
Yeah, and Shannon Scott, CEO at TaxBreaks.com, Tax Break CEO. I really appreciate you being on the program. Truly a fascinating show, and I'm just overwhelmed with the amount of information. But again, thank you for your participation this week.
Thank you, Peter. I really appreciate the time.
Yep. Thanks a lot, guys. Tune into the program next week, same time, same place. You're listening to the In Black and White's radio program with your host, Peter Weitz. Make it a great week.
Thank you again for tuning in to In Black and Whites. Please join your host, Peter Weitz, again next Tuesday at 10 a.m. Eastern Time and 7 a.m. Pacific Time for another edition of the program on the Voice America Business Channel. Have a safe week.